Hello everyone, I'm Raj and welcome to my YouTube channel where we learn and discuss about the shares and long term and potential in the shares for the short term and the long term investments. If you're new here, then like and subscribe and share this video to everyone if you find something new to learn. So let's dive into the learning part. Now, before considering any share or recommending any share to buy, we will understand how the share price is influenced by the fundamental analysis and the technical analysis. So before selecting any of the share, we have done the analysis of the fundamentals as well as technicals. So in the fundamentals, we have included price to earning ratio, dividend ratio, EPS ratio, EV EBITDA ratio, and PG ratio. So we have covered these indicators, I can say ratios, right? On the basis of that, we are analyzing the shares. Now, we have also included the technical analysis. So only those shares have been included which are good in terms of the technical analysis, right? So we have included the price charts, trends, support and resistance levels, chart patterns, technical indicators, as well as volume analysis. So we have done these analysis, right? So we have taken the Ramakrishna Forgings Limited share for the analysis. So now let's move on to the fundamental part. So here we have taken the pros and cons, where we can see that the company is expected to give good quarter results. Company has delivered good profit growth of 21.2% CAGR over last 5 years. Debtors days have improved from 130 days to 88.6 days. Company's median sales growth is 20.4% of the last 10 years. So in the last 10 years, company has, in compared to the last 10 years, company has grown the sales to the 20.4%. Companies' working capital requirements have reduced from 132 days to the 102 days. It means the company has less requirement of the working capital. Next, the cons are that company's stock is trading at the 6.75 times of its book value, which I don't think that it is a consequences. Now let's do a peer comparison of the company, right? We can see that there are like 7 companies, out of which Ramakrishna Forging Limited is also there. All right. So if we'll take the industrial average of this casting and forgings, we can see that the median is in terms of the 1 month return is 8%, whereas the company is giving the 23.03%. Along with this, if you'll take the industry's PEG ratio, which is the 0.79%, right? Whereas Ramakrishna Forging Limited is the 1.52%. All right. So in terms of the 3 months return, industrial, or I can say the industry's median return is 26%, whereas Ramakrishna Forging Limited is the 60.24% 3 months return, right? And in terms of the dividend, we can see that company is giving the 0.36% as a dividend, right? And in terms of the yearly returns, we can see that the company is giving the 187.99% of yearly return. It means that this is the highest returns out of these industry shares, right? So all the industries are giving the all the companies are giving the very less returns in the 1 year, which is the 86%, 11%, 154%, out of which the Ramakrishna Forging Limited is giving the 187.99% of return, which is the higher than that. So if we'll consider this, then we can say that this company Ramakrishna Forging Limited is giving the better returns in comparison of the other shares, right? So let's move on to the other part. In the quarterly results, we can see that the company is continuously growing the earning per share. It was like 2.2 12% in the March 2021, but now it is the 4.90%. Along with this, we can see that the profits before tax is also increasing, right? Continuously, it is increasing. It was 37, but now it is 104. Right. So let's move on to the profit and loss part. So in the profit and loss, we can see that the sales in the March 2017 was 921 crores, but now it is the 3193 crores. Along with this, the net profit is growing continuously. If you look here, it was 11 crores, 95 crores, then 120 crores, then 10 crores, then 21 crores, then 198 crores, and then 248 crores. It means company's net profit is also growing. So company seems to be better in terms of the profit and loss account. Next, finally, ratio analysis. In the return on capital employed, it means that the capital that has been employed by the company, and on the basis of that, and on which the company is generating the 7% of the return on capital employed. After that, it started growing 7%, 14%, 16%. It reduced bit due to the COVID, and after that, it started growing again 6%, 15%, and now it is 18%. And definitely in the future, the return on capital employed is going to be improved. Next, we have done the technical analysis, right, in which we can see that the company shares was 450, but now it is on the 1st August. It is growing continuously, right? And in terms of the all time, we can see the company share in the 2022 was around 250, but now it is trading at the 557.90 rupees, right? So it means the company is growing, and in terms of the technical also, company is performing very well, right? So now on the basis of this, we can say that the company is doing very well in terms of the business, as well as the company's profit and loss is increasing, right? Company's quarterly results are also very well. Peer comparison, in terms of the peer comparison, company has done very well. Ratios of the company is very perfect, and every share has a certain life. If you choose a particular share, so that share may be in the down phase also like this, but this is not just because of the technical analysis. A share is based on both technical and the fundamental analysis. So the technical would not be good here, right, as we have already seen. Now let's see, like technical would also be uh, would also not be good. That's why the share was in down phase, right? But now, as the company's fundamentals improved, we can see that the share price started growing gradually, and now it is trading at the 557 rupees. Definitely, the fundamentals are very good, and the share price could further grow in future. All right. So we have discussed all the parts. So now, thank you so much for watching this video. And if you are here, and if you're still here, so like this video. Along with this, you can follow me on Instagram and the YouTube, where I keep on posting new updates of the companies which are good in terms of the fundamentals and the technicals. We have already done the deep research on the share, on the fundamentals, and we have done the valuation of the share. After that, we are presenting this for the education purpose only. You can do your own research and understand if the share is good for you or not, and then take the decisions wisely. You can choose the shares if you find the share interesting or good in terms of the price, and then you can invest if you like. And please take care of yourself. Thank you. Bye bye.